The market isn't cooling, it's on fire. Projects are selling out on launch weekend, show flats are packed, and buyers are queuing like Swifties going for VIP seats. And while the headlines focus on record sales, developers are already making billion-dollar moves behind the scenes. In just the past few weeks, 4 major land parcels were snapped up, worth more than $2.6 billion combined. That's not coincidence. That's positioning. Because when homes move this fast, the smart money doesn't wait for the next cycle. It builds it. So today, we're breaking down exactly what developers are buying, why they're buying it, and what it means for where Singapore's property market goes next. Every few months, the Urban Redevelopment Authority, or URA, releases government land for tender. And those bids, they're like reading the heartbeat of the market. In October and November 2025, 4 tenders closed. Dorset Road, Upper Thomson, Telok Blangah, and Bukit Timah Road. Add them together and you get a crystal-clear snapshot of where developers believe the next wave of demand will land. Let's start with the heavyweight, Bukit Timah Road, near Newton MRT. Prime Core Central Region. HH investment came in hot at $1,820 per square foot per plot ratio, the highest for a GLS site in the CCR since 2018. Remember then when the current Cuscaden Reserve GLS site was bidded at $2,377 per square foot per plot ratio? So now, over at the Newton site, when you build in costs and margins, that's a potential future launch price around $3,400 per square foot. That's remarkable confidence, considering the 12% difference between the top 2 bids. Developers don't pay those numbers unless they believe high-end demand is alive and kicking. Next up, Dorset Road, just minutes from Farrer Park MRT. 9 bidders. That's a feeding frenzy. A joint venture between UOL Group and Singapore Land Group took the prize at $1,338 per square foot per plot ratio, pointing to a potential future launch around $2,600 per square foot. City fringe, close to MRT, and appealing to upgraders who want convenience without CCR prices. This is the mid-tier market in motion. Now let's head south, Telok Blangah Road, part of the Greater Southern Waterfront transformation. Kingsford Group topped the bids at $1,326 per square foot per plot ratio, so we're looking at a future launch around $2,600 per square foot as well. Only 3 bids came in, but think about it. This is the first private residential site in Singapore's next waterfront district. They're not buying today's value, they're buying tomorrow's skyline. And next, the comeback story? Upper Thomson Road, Parcel A. Last year, that same site got 0 bids. URA tweaked the rules, dropped the service department clause, and suddenly, 5 developers jumped in. We, Her, and GSC Holdings won it at $1,062 per square foot per plot ratio, which means a future launch price around $2,300 per square foot. That's a remarkable turnaround and a signal that confidence is back in the suburbs. With most of the units at Springleaf Residence sold at recent launch, there is also less concern over competing private housing supply in the immediate areas. Step back for a second and look at the pattern. Fewer bidders per site? Sure. But prices? Still firm, even rising. That's not over-exuberance. That's strategic conviction. Developers aren't chasing everything. They're chasing the right things because they know the fundamentals haven't changed. Limited land, stable employment, strong household wealth, and a market that still values real estate as the safest long-term store of value. And remember, these sites won't launch tomorrow. They'll come only in 2027 or 2028. So developers are effectively saying, we believe the next upswing is already forming, and they're putting billions behind that belief. Here's what that tells us. Based on these land prices, expect new launch prices in 2026 to range roughly $2,400 to $2,700 PSF for city fringe projects, and $3,300 and above for very prime central sites. And when new projects set new highs, resale homes nearby rarely stay behind. That's the ripple effect. New benchmarks pull the rest of the market upward. So if you already own property near Bukit Timah, Farrer Park, or Upper Thomson, the value of your land just got an upgrade. For homebuyers waiting for prices to cool, that window might already be closing, because developers can't price below their land cost, and that floor just moved higher. At the end of the day, these aren't just land bids, they're signals. Developers aren't reacting to demand, they're anticipating it. And when the smartest players in the market are this aggressive, they're not guessing. They're forecasting the next run-up. So while most people are still asking, is now a good time to buy? The developers have already answered that question with $2.6 billion. If you found this breakdown useful, hit that like button, subscribe, and stay tuned, because the next round of GLS tenders might just tell us where Singapore's next property boom is about to begin. Visit SingaporePropertyLens.com to uncover hidden blind spots in your next property purchase. I'm PK So, and I look forward to serving you in your real estate needs.